In this video, we will learn what is equity and what does it mean by buying stocks or buying share. Equity is the amount of money a owner or shareholder owns in a company. On a company's balance sheet, the difference between its liabilities and assets shows how much equity the company has. That is, total assets minus total liabilities is equal to equity. Let us discuss some important points about equity. The value of equity is figured out by its share price. In simple words, equity is the amount that will be paid to shareholders if the company's assets will be sold and all its debts will be paid. Now, let us know about equity investment. An equity investment is money that is invested in a company by purchasing shares of that company in the stock market. By purchasing share of any company, you can be an owner of the company. By doing this, you will get the share of company's profit in terms of increased share price or as a dividend that company offers time to time or by both the way. At the same time, you will have to ready to share the company's loss also. Let us know some important features of equity. Every individual who has invested in a company's equity shares gains an ownership claim on the company's assets. When you buy a company share, you will get the share of the company's profit in a proportion number of shares you hold. If you have shares of any company, you have right to vote in any decision making for the company. Liabilities of the shareholders are limited only to the value of the shares they have invested in. The money you have invested in equity, you cannot get it back as long as the company is functional. But it is possible to transfer the equity by selling the shares. Thank you for watching. Please like and comment if you find this video helpful.